Can the housing industry rebound without government support? The economic rebound may depend that it can. Let's bring in real estate attorneys Shari Olefson from Fowler, White and Boggs and Stephen Meister from Meister, Seelig and Fine. Hello, everybody. Shari, talk to you. You know, you read in the papers how this modification program has been a disaster. The redefaults are up. No income documentation. Clearly, the tax credit just stole from the future. Let me just ask you at the top, are we double dipping in the housing recession?
It looks like that, but you know what, Larry, the fear here is not so much of another drastic price dip. I mean, maybe another 5% over the next year or so, and maybe just in some markets. The issue is more about a long, dragged-out recovery. A lot of people you hear out on the streets are waiting for their home equity to recover, and it's just not going to happen quickly.
You know, one of the questions we're asking here, Stephen, is whether or not the government should get involved. I mean, look at what's happened thus far. We've seen that the expiration of the first-time home buyers tax credit has actually resulted in sales looking much, much worse. So are we essentially, or did we just delay the inevitable? And if we have more government intervention, do we run the risk of making the situation even worse in the future?
I think we're in for a double dip with or without further government intervention, and I think it could be significantly more than 5%, perhaps 10 to 25% further in markets which are rich with foreclosures. Don't forget, Trish, we had 6.6 million foreclosure filings in 07 to 09, but only 2.2 million houses were actually repossessed. So we entered 2010 with a 4.4 million house backlog. I think there's going to be 5 or 6 or more million
regardless of what the government does.
That's right. And, well, what they've done is they've increased the backlog because the president's mortgage modification program has obviously slowed the process because we see it's failing, and so now those houses are coming on. So the point is that there's going to be additional filings in 10, 11, and 12. I think 10 million houses will come on the market. We're in a market where 5 million, a little more, trade a year. So in a 3-year period where normally the market would have to reach for 15 million sales, now it's going to have an additional 10 million sales. That can only be met with price cuts.
Well, Shari, let's stay with this. First of all, given the failure of the modification program, people dropping out left and right. What did I read? Almost 450,000 people just dropped out of the thing. No income documentation was one reason, so we repeated part of the original mistakes. But on this point, are we going to see a new wave of foreclosures? And is that, in turn, going to snowball into more consumer deleveraging across the board?
Well, we're already seeing a new wave, not only of foreclosures, but of defaults. That's the biggest number and an indicator because the lenders, you know, everyone's correct. The lenders are slowing down thanks to the modification programs. But I don't think, I mean, in real estate, we have some pretty solid historical indicators in terms of price. We look at ratios of price to income. We look at ratios of rent to price to buy. And people need a home. So, I think that the prices have more or less bottomed. But an interesting point with these modifications is that we've had more than enough government in terms of intervention with this modification program.
To last us a century. To last us a century.
Right.
We've had more than enough government to last us a century, maybe 2 centuries.
At least our lifetimes, yeah. But what it's really done is it's given millions of Americans a really bad experience with their banks and with their government, and they never should have been in line for those modifications in the first place. And what that's turned into is a reason for Americans to rationalize walking away from their mortgages, which is snowballing this problem.
Yeah, and we've talked about this on this show before, the fact that some countries, like Canada, do not have programs in place where you can simply walk away. They'll actually follow you for the rest of your life and make sure that they're deducting your monthly mortgage payment from your paycheck. Not the case here in the U.S. of A. But, Stephen, back to you for a moment. You're convinced we're heading for a double dip for housing. What does that do to the rest of the economy? Does it send the entire economy back into recession?
Well, here's an interesting question in that regard, Trish. You have the FHA now writing 1 in 3 mortgages, insurance on 1 in 3 mortgages, up from 2 in 100 back in 2006. They're doing it on 3.5% down payments. That's less than the broker walks away with.
The new subprime.
So if, that's right, so if we do see the double dip that I see because of the this huge shadow inventory, we're going to have a massive bailout in the FHA, which is already at 1/4 of the congressionally mandated minimum reserves. So I think that could be problematic and could exercise a drag on the overall economy.
Well, you're going to own the FHA. You already own Fannie and Freddie, my friend, as a taxpayer. We can join hands on that. Shari, last one to you. There's a lot of adjustable rate mortgage stuff coming due now. What's that going to do? There's a new wave. Adjustable rate mortgages were taken out 3, 4, 5 years ago. What is that going to do to this story?
Well, that and the new HAFA program, which the government is implementing, which is encouraging short sales and deeds in lieu, are both going to add to the inventory and drive prices down. But, Larry, the big distinction here is we have more inventory than we need, but we still need houses. So these units are not like widgets or something else that aren't going to eventually be absorbed. People need a place to live.
Let us hope that manufacturing production and capital spending keep the economy afloat. Housing is a small share of the economy. So I don't know about the double dip, but we got to pray for manufacturing production and business investment.